Today, I want to talk about how banks are now officially collapsing, and not just in China, but in the US as well, and how this will lead to some catastrophic margin calls starting the squeeze. So stay tuned and let's make some money. Later in the video, I want to go through the brilliant 100% gainer we had in the Millionaire Mindset trading group on SNGX. But now to dive straight in with the key information. So, Sina tweeted saying Jiangxi's Bank of China has just gone under, saying China's banking sector is facing a full-scale crisis. In just 1 week, 40 banks disappeared, absorbed into larger institutions. And he said today Jiangxi Bank of China went under, further escalating the crisis, saying China's smaller banks are struggling with bad loans and exposure to the ongoing property crisis. Now actually, this sounds word for word like the US as well. Many of these banks in the US have bad loans. Actually, bad debts in US banks are currently 5 times larger than they were back in 2008. And there's also an ongoing commercial real estate crisis in the US as well, destroying the entire market. Now, he said some 3,800 such troubled institutions exist, approximately 13% of the total banking system. And in recent years, some of these banks have revealed that up to 40% of their books are made up of non-performing loans. And he said Bank of Zhejiang, a mid-tier lender, recently revealed that its profits might fall by 30% due to poorly performing loans. Now, as I'm also going to touch on, tons of US lenders are about to reveal earnings with a massive drop in profits. And he said this rare disclosure highlights the severity of the situation. The authorities have been pushing for more transparency, just like in the US, but the true extent of the bad debt problem is still emerging. Now, as Just Dario pointed out, he said, what a surprise. It's tough to hide till maturity your losses forever for these major US banks. As PickSuite has posted saying US bank profits face pressure from lower interest payments and higher credit losses, saying some of the largest US banks will probably report weaker profits for the second quarter as they earn less from interest payments and set aside more money to cover deteriorating loans. So again, we're about to have US banks doing the exact same as Chinese banks and reporting lower profits. And these profits are falling due to the poorly performing loans and the losses they're taking on. It says as banks kick off earnings season on Friday, analysts predict provisions could rise for potential losses on commercial and industrial loans, and saying these loans actually pose a greater risk to major banks now in 2024 than they did in 2023, and even suggesting that banks like JP Morgan and Bank of America could report over 10% declines in earnings. Now, 741 Trey has also tweeted about how the ISDA CEO sends a reminder that global banks are holding US treasuries as hostage. So the ISDA CEO said separately, we've called for a permanent exclusion of US treasury securities from total leverage exposure, suggesting that had free capacity for the banks to participate in US treasury markets and facilitate access to cleared markets, especially during periods of stress. It basically means that because US treasury securities are included in total leverage exposure, many of these banks are actually too over-leveraged. Right now, they can't add to their positions because they're so heavily over-leveraged that they're actually not going to meet margin requirements if they leverage up anymore. Again, suggesting that actually many of these banks are on the cusp of survival, and saying that disproportionate increases in capital or risk could force banks to retreat from certain trading and intermediary businesses. Again, which suggests clear as day that if these banks have to take on any more risk, they simply can't survive and would have to retreat from trading. Now, I also wanted to go through the fast-moving momentum news play from today in the Millionaire Mindset trading group, which was SNGX that ran for 100%. You can see in the pre-market, I said that I was watching and waiting for SNGX to break over $7.40, which it did when the market opened, where I alerted the group that I'd bought SNGX. Now, annoyingly, I managed to sell SNGX a little bit early, not timing the very tippy top, but Arif managed to generate some brilliant gains, making nearly $500 in just one trade. I also wanted to show you all of Harhan's brilliant trades from today, where he made 32% gains on ZAP, 23% gains on IVP, and 17% gains from OPTT, all from the watch list. Now, these weren't stocks I specifically traded or specifically alerted, but they were stocks that were on the watch list and that were traded and profited on by Harhan. So guys, if you want to be making these daily gains, be sure to join the Millionaire Mindset Trading Group using the link in the description below. Boss Blunts has explained further, saying banks no longer have sufficient capital to continue buying US Treasuries, and in fact are holding Treasuries hostage, saying the reverse repo program hit highs of $2.55 trillion in money market funds, which have now collapsed to under just $500 billion, saying these banks have insufficient funds to keep buying US Treasuries and other countries want no part of it, saying banks are overleveraged and are demanding the exemption of exposure to US Treasuries from their leveraged calculations and ensure that that exclusion becomes permanent. And he's saying the Fed and the Treasury have no choice but to oblige or risk default on US government debt, as there's no one else willing or able to continue buying up these treasuries. These banks are effectively just creating a spiral where the Fed and the government creates more debt that the banks buy up, and then they therefore create even more debt. And the Fed effectively has to allow these banks to buy an unlimited amount of treasuries because nobody else wants any part. And to do so, they have to exclude these treasuries from leverage calculations to allow these banks to get even more heavily leveraged. And all it will take is one small card to fall to bring the entire house of cards collapsing down. And that one small card could be GameStop exploding from the current hedgy-wedgy setup. We can see since May, GameStop is still forming this bullish flag or bullish pennant pattern, which explodes when GameStop runs over $26 and over $36. That could line up with another tweet from Roaring Kitty, it could line up with something else, and it could end up pushing GameStop to new recent highs. When GameStop breaks out of this pattern, AMC will also follow, and Peter Han has tweeted saying that he understands the people that were shorting AMC back in October of 2020 and most of the 2020 year. But he said he simply cannot fathom anyone strapping on a new short at these levels in 2024 when AMC is becoming profitable and is setting new records like the one just set last weekend. And he said the only shorts shorting here would be resetting an already existing total return swap. But said the question always remains, why roll the existing swap and not just close out of a short position when AMC is now on an upward trajectory? And he said it's because these shorts can't afford to book realized losses or even can't afford to buy back and close positions when the algorithm would go bonkers trying to account for even a few shorts covering. Now, some of the shills out there may say, Tom, all of the shorts have already closed their short positions at AMC. But as you can see from the data, that's just simply not the case, as short interest right now is near all-time highs at 55 million shares shorted. You can see this is even up massively from a month ago at 51.1 million shares, so shorts have shorted an additional 4 million shares this month alone. And finally, Meta News has also tweeted saying just in, South Korean regulators are now investigating the MMTLP issue. You may remember the SEC investigated the MMTLP issue and tried to disregard any wrongdoing, even though there was tons and tons of factual evidence. And by factual evidence, I refer to those TradeStation emails where they said they could not DRS shares of MMTLP or NextBridge hydrocarbons as they hadn't been allocated nearly enough shares. But as of the 3rd of July, the South Korean Financial Supervisory Service has just begun an investigation into MMTLP. And the preliminary findings are expected to be announced within 14 business days, aka by the 23rd of July. So it will be very interesting to see what an actual investigation uncovers about MMTLP. The reason why I say an actual investigation is because we know South Korea isn't biased towards helping synthetic shorting. Actually, they're the complete opposite. We know the SEC supports the illegal shorting and encourages the illegal shorting in the US. But South Korea is actually trying to stop all synthetic shorting, especially in South Korea, from existing at all. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.